53%. That's the share of Americans who have a side hustle and say they'd struggle to cover essential expenses without it. Not build savings, not invest, cover essential expenses. And 3 in 4 of those same people say rising costs have increased their reliance on side income over the past 12 months. So when we talk about the side hustle economy, we're not talking about ambition. We're talking about survival.
More than half of side hustlers couldn't cover their bills without the extra income?
53%. And the share of Americans working multiple jobs just hit a 25-year high. 70 million Americans are now part of the gig economy in some form. That's more than a third of the entire workforce. But here's what almost nobody explains: the taxes, the traps, and how to actually make a side hustle build wealth instead of just treading water.
That is today's episode. And this one is personal for a lot of people. Welcome to Trek4Wealth. I'm Avery.
And I'm Grant.
Episode 18, and we are getting into the side hustle economy, the real one, not the Instagram version where everyone's making passive income on a beach somewhere. We're going to look at how America went from the most stable employment era in history to a world where 70 million people are cobbling together income from multiple sources. Then we'll get into the taxes, the part that kills most new side hustlers. And finally, how to use a side hustle strategically to actually build wealth, not just survive.
Because there's a huge difference between a side hustle that keeps you broke and a side hustle that builds you free. And that difference is almost entirely about what you do with the money.
Let's get into it.
Okay, so here's the historical context that most people completely miss. The gig economy didn't start with Uber. It didn't start with apps. The seeds of it go back much further, and understanding where it came from explains a lot about where we are today.
How far back are we talking?
Think about the post-World War II era, 1945 to roughly 1970. If you were a working American during that period, particularly if you were white and male, you could reasonably expect to get a job with one company, stay there for decades, get a pension, have your health insurance paid, and retire with dignity. It was the most stable employment era in American history. And it wasn't an accident. It was the product of massive union density, government labor policy, and a booming economy where American manufacturers faced basically zero global competition.
So the one job for life thing was actually real. It wasn't just nostalgia?
It was genuinely real for a significant portion of the workforce. Then, starting in the 1970s, that started unwinding. Global competition, stagflation, the oil shocks. Companies started looking for ways to cut costs, and one of the most powerful tools they found was reclassifying workers from employees to independent contractors. If you're a contractor, I don't pay your health insurance. I don't contribute to your pension. I don't pay half your Social Security tax. I don't owe you severance. The Cornell labor historian Louis Hyman puts it perfectly. Uber didn't create the gig economy. Uber took advantage of it. The gig economy was already the destination because corporate America had been dismantling traditional employment for 50 years.
So the flexibility of gig work isn't freedom, it's the cost getting pushed onto the worker.
For many gig workers, that's exactly right. The word flexibility in the gig economy often means we've transferred the risk, the benefits cost, and the tax burden onto you. And speaking of tax burden, this is the thing that catches almost every new side hustler completely off guard.
Okay, walk me through the tax trap because I've heard it's brutal.
It is brutal, and it's sneaky because it doesn't hit you until tax time, when it's too late. Here's the thing that makes gig and freelance income different from a regular W-2 paycheck. At a traditional job, your employer pays half of your Social Security and Medicare taxes. That's 7.65%. You pay the other half out of your paycheck. You barely notice it because it's withheld automatically. But as a side hustler, As a 1099 contractor, there's no employer, so you pay both halves. The full 15.3% self-employment tax, on top of your regular income tax.
Wait, so you're paying more than a regular employee just on Social Security and Medicare alone?
You're paying the employee share and the employer share. And that's before federal income tax, before state income tax. A side hustler who earns $20,000 from gig work and doesn't know about self-employment tax can easily owe $4,000 to $5,000 at tax time with zero withholding to cover it. It's like a bill that arrives in April with no warning.
$4,000 to $5,000. That you weren't expecting. In April.
And the IRS doesn't care that you didn't know. They want their quarterly estimated payments every April, June, September, and January. If you're earning more than $400 in net side income, you are legally required to pay estimated taxes. Most first-time side hustlers don't find this out until year 2, when they owe penalties on top of the tax.
So the system punishes you for not knowing the rules it never taught you.
Welcome to 1099 life. Now, here's where it gets more interesting. Because self-employment isn't all bad news from a tax perspective. As a side hustler, you can deduct legitimate business expenses. Your home office, if you have a dedicated workspace. Your equipment. Your software subscriptions. Your phone, the percentage you use for business. Mileage if you're driving for the gig. These deductions reduce your net income, which is what the self-employment tax is calculated on. A side hustler who earns $20,000 but has $6,000 in legitimate deductions pays self-employment tax on $14,000, not $20,000.
So knowing your deductions could save you thousands?
Thousands, every year. And yet most gig workers track nothing and claim nothing because they don't know they can. So we've covered where the gig economy came from and the tax trap. Now let's talk about what separates a side hustle that actually builds wealth from one that just burns you out. Because 65% of side hustlers report experiencing burnout, and only 44% feel financially secure. So most people are working more and still not getting ahead.
The side hustle economy has a dirty secret, doesn't it?
It does. Most people are earning an extra $400 to $600 a month and spending every cent of it. The hustle becomes a hamster wheel. More work, same financial position, less time. And the reason it doesn't build wealth isn't the hustle. It's what happens to the money after it hits your bank account.
The invest the difference problem again, like in episode 16 with renting.
Exactly the same principle. The side hustle earns you extra income. That extra income only builds wealth if you treat it differently from your regular income. Here's the practical framework. There are really 3 types of side hustle income, and they need 3 different treatments. Type 1. Survival income. You need this money to cover bills. If that's you right now, that's okay. But the goal has to be to either increase your primary income or reduce your expenses until the side hustle income can graduate from survival to building. If you're permanently dependent on side income just to cover basics, you haven't gained financial flexibility. You've just extended your work hours.
That's a hard truth, but it's the truth.
It is. Type 2. Buffer income. The side hustle covers your emergency fund or pays down debt. This is the right first destination for new side hustle income if your basics are covered. We talked in episode 8 about how 51% of Americans can't cover a $1,000 emergency. Side hustle income going straight into a high-yield savings account until you have 3 to 6 months of expenses, that's a total game changer. Type 3. Wealth building income. And this is where it gets exciting. A side hustle generating more than you need for survival and your emergency fund becomes investing income. Specifically, and this is the one most gig workers completely miss, if you have self-employment income, you can open a solo 401k. Not a regular 401k, a solo 401k. And you can contribute up to $70,000 a year as both the employer and the employee contribution. $70,000. Tax advantaged.
Wait, solo 401k contributions can go up to $70,000?
Up to $70,000 for 2026, depending on your net self-employment income. Compare that to the $24,500 limit for a regular 401k. The solo 401k is one of the most powerful retirement tools available to any American, and it's sitting right there for anyone with self-employment income. Almost nobody uses it.
So gig workers have access to one of the best retirement tools in the tax code, and most of them don't know it exists?
Most of them don't know it exists. And the IRS crackdown makes this even more urgent, because the agency now uses AI-driven tools to flag unreported 1099 income. Every platform, Uber, DoorDash, Airbnb, Venmo above certain thresholds, reports to the IRS. There is no hiding side income anymore, which means understanding the tax system isn't optional. It's table stakes.
Let's give people the wealth moves, concrete stuff they can act on today.
5 moves. Whether you're just starting a side hustle, already have one, or are thinking about it. Wealth move number 1. Set aside 25 to 30% of every side hustle payment the day it arrives. Not when tax time comes, the day it arrives. Open a separate savings account labeled Tax. Move 25 to 30% there immediately. This is not your money. This is the government's money that you're holding. Treating it that way from day one eliminates the April surprise entirely.
Even if some of that money comes back as a refund?
Even then, better to oversave and get a small refund than to undersave and owe thousands plus penalties. Wealth move number 2. Track every business expense from day one. Open a dedicated bank account and credit card for your side hustle immediately, even if you think it's too small to matter. Every legitimate business expense reduces your taxable income. Mileage, equipment, home office, software, phone percentage. It takes 10 minutes a week and can save you thousands at tax time. Wealth move number 3. File quarterly estimated taxes. If you expect to owe more than $1,000 in taxes from your side hustle, you're required to make quarterly payments: April 15th, June 16th, September 15th, January 15th. Set 4 calendar reminders right now. Missing quarterly payments means penalties on top of whatever you owe. The IRS charges interest from the first day the payment was due.
And how do you estimate what to pay quarterly?
A simple rule. Take your prior year's total tax bill, divide by 4, and pay that each quarter. Or use the IRS's safe harbor rule. Pay 100% of last year's taxes across 4 quarters, and you won't owe penalties even if this year's bill is higher. Wealth move number 4. Open a solo 401k if you have net self-employment income. You need an EIN, an employer identification number, which is free and takes 5 minutes at irs.gov. Then open a solo 401k at Fidelity, Vanguard, or Schwab. Contribute as much of your side hustle income as possible. Your contributions are tax deductible. Your money grows tax deferred. This is the single biggest wealth building lever available to gig workers, and almost nobody pulls it. Wealth move number 5. Decide what type of hustle you have and build accordingly. If it's survival income, the goal is escaping survival mode. If it's buffer income, automate it straight to savings. If it's wealth-building income, invest the difference, fund the solo 401k, and treat it like the business it is. The side hustle doesn't build wealth by accident. You have to tell the money where to go.
Tell the money where to go. I love that.
Here's what the history of work actually tells us. From the Victorian pieceworker paid by the coat, to the Depression-era day laborer, to today's DoorDash driver, there has always been a version of the gig economy. What changes is the power balance between worker and platform. In the post-war decades, workers had more power than at almost any time in history. That pendulum swung hard the other way starting in the 1970s, and apps just digitized the arrangement. But here's the thing the data also shows. The most successful gig workers, the ones who actually build something, are the ones who treat their side income like a business, not like a lucky extra paycheck. They track their expenses, they understand their taxes, they protect their income from the IRS, and they use the tools the tax code actually gives them, like the solo 401k, to build wealth that traditional employment once provided through pensions. The hustle is real. The question is whether you're building something with it or just running faster on the wheel. Preparing without predicting. Always.
That's Trek4Wealth. We went from the post-war employment golden era to the 1970s corporate restructuring that built the gig economy long before Uber existed, and landed on 70 million Americans doing some form of gig work today, with 53% saying they couldn't cover expenses without it. The tax trap that hits every new 1099 worker, 15.3% self-employment tax on top of income tax, with no withholding. And 5 wealth moves, including the solo 401k, the most powerful retirement tool almost nobody knows about, available to any American with self-employment income. If this one resonated, share it. Someone you know is running a side hustle and getting crushed at tax time. Send it to them. Subscribe because we've got more ground to cover. And as always, keep trekking.